Alright guys, so welcome to another episode, and so today we're doing another market focus. But before doing the focus and seeing what pairs we have for next week, let's do a quick trade recap from last week. So we had two trades last week. We had one on BTC and we had another one on gold. So I'll go through the one on BTC real quick. So that was on the, I think right here. So we had this trade on the 12th. So this one, we went in for a sell on BTC. So we took a sell right here, and as the trade progressed, we had to break even on this right here, and we didn't close the trade at this point. So we kept holding it, and I kept updating the group on what we was looking at, and eventually the trade reached our target point or the take profit, and this closed at about 2.07. So the sell on Bitcoin was actually very good. And I'll look at gold. So on gold, we attempted the sells as well. But for the sells that came in on gold, we did attempt this on the 10th. So we had this on the 10th. We went in for a sell right here. And it was a similar move with what was happening on BTC. And if you recall from what happened last week, we was expecting the DXY to move to the upside, and then eventually we'll take these sells on these other pairs. So we had a break even right here once the trade started performing. I was expecting prices to get to an area like this, but eventually prices reversed on us. So while we was on the break even, prices reversed and it took us out. So that was it for the trade recap from last week. So one good position on BTC, which ended on about say 2.7% right here, and a break even on the gold trade. So let's dive into what we have this week and let's see. So we'll start real quick with the DXY. So coming into next week, let's say from last week, we was looking at this movement to test an area like say 104, and we was expecting prices to reject from this point or react from this point, and we see prices move to the upside. The funny thing about this one is the buys that came in, I was expecting the buys to get to an area like this, and then we see some reaction or some rejection as well from 105, but prices just flew through this point and it went straight to 106. So right now we have the DXY on 106. We're on the daily time frame, so it's kind of difficult for you to look at the structure that's building up on the daily time frame. And so it's always important for me to step say to lower time frames and see the structure that is building up. But if you just go off of what is happening on the daily time frame, and I'll do this real quick. So looking at price on the daily time frame, and you know we're working on these levels. So if you just go back to an area like this, so we had prices trading to the downside. We had a reaction at 105. Prices moved back to 106. We had a reaction that took it all the way to 104. We had a breach of this side. We had a test of it. Prices moved down, came back, had a test of 104, an impulsive move to the downside. And right here, we had a breach of this area, a test of it, a move up as well to say 105. Sellers came in again, had a test of this area, and prices dropped to the downside. So for any person that's out there, and if you use psychological numbers as areas of point of interest and stuff like that, it's going to be very important for you to pay attention to 106, which is where prices are right now, because if we get a reaction or a rejection at this area, we should expect prices to move to the downside. Now there are two things I'm looking at when it comes to the DXY just from the daily time frame, and I'll make this real big. So first off, we had a reaction here, prices moved to the downside. We had a reaction at 104 and prices moved to the upside. So looking at the DXY just from the daily time frame, if we get a reaction here, and let's say we put say basic trend line like so, now you can add other confluences or other reasons as to why price might move to the downside. And this is pure technicals. You're not using say economic data and stuff like that. You're just looking at it from a technical perspective, and there's a high chance price will move down to test say this trend line that is building up, And not just this trend line, but we're also looking at an area of 105 right here. So there's a high possibility that coming into next week, we might see the DXY pulling back. So we might see sellers coming in for the DXY. And two principles I'm using here, and I always use these principles when I'm doing the market focus, and it's something I've been doing for a very long time. So just going off of the psychological numbers, right now we're trading at 106. If we get a rejection at 106, or we get a powerful reaction from the sellers at 106, we should expect to see the DXY pulling back. And that's just from the psychological numbers. If you use the trend line, so each time price bounces off this trend line, you have an impulsive move to the upside, then you have a correction. The same thing, we had a reaction from this point, an impulsive move to the upside, price is reacting at 106. So there's a high possibility that sellers might come in, and then we see this pullback or this correction to an area like 105, and as well this trend line right here. So my bias for next week is, I'm still bullish on the DXY because price is still moving to the upside, and we only become bearish on the DXY in terms of a major trend once we have, say, a breach of this trend line that is building up here. We breach, and then we see prices trading to the downside. So coming into next week, I still have this bullish bias on the DXY, but I'm expecting a pullback to come in. And this pullback that is coming in is not a major move. I'm looking at it as a correction on the DXY. And if we have this correction on the DXY, we should expect prices to go back and test an area like 106, or even go above 106. Now, when you do the market focus, it's very important you put certain things into perspective. So price might as well just trade above 106, and coming into next week, we might see prices test this area without pulling back into an area like this, and we see prices continuing to the upside. It's very possible as well. But going off of what is happening right now, and going off of this psychological number right here, and this trend that is building up on the DXY, as of now, I'm expecting sellers to get like a reaction or a rejection at this point, and then we'll see a pullback. So I'll step down to lower time frames and we'll see if there's anything that is building up. So on the 8-hour time frame, once I step to lower time frames, I'll go back to the daily real quick. So once I step to lower time frames, I like looking for, say, structural moves to see if there's anything that is building up on lower time frames. So if we move down to the 8-hour time frame, this is the piece of price action I'm most concerned about, this right here. And it's difficult for me to see, say, a structural move on the 8-hour time frame, and so I'll continue moving to, say, lower time frames, and I'll step down to like the 4-hour time frame. So on the 4-hour time frame, this is much better because we had this period of consolidation. We had a massive move to the upside. We had some kind of a consolidation here. We've had a massive move to the upside as well. So price is most likely going to face some consolidation around this area. And if we have this consolidation going off of what we're looking at, say, from the daily time frame, we should probably get, say, a breach of this area, a test of it, and then we see prices moving to the downside. Now, how far would the sellers take prices to the downside? That's left to the market makers or those big players, but we should expect, say, the DXY to drop or to come in with a correction. So looking at it from the 4-hour time frame, we had this trend building up on the daily time frame, but on the 4-hour time frame as well, we have this area, we have this area, and prices at this point right here. So there's a trend line that is building up on the lower time frame, like the 4-hour time frame, and once this trend line gets violated, we should expect those sellers to come in. So the difficult thing about the DXY as of now is the extent to which the sellers are going to take prices to the downside. So when we move to lower time frames, I presume, say, the 1-hour time frame, what I'll be looking for is a period where the buyers complete their move. So for us to have sellers coming in next week, we need to see, say, buyers moving to the upside, and we need to see when this buyers complete, and then we see sellers coming in. So when I drop down to the hourly time frame during the early hours of next week, I'm looking for areas where buyers are finding it difficult to make a move to the upside. So 106 is a point I'm very much concerned about, and if we see a consolidation around this area, which is simply a rejection or that inability of price to move to the upside for the buyers, then I'll be expecting to a breach of this area like so, and then we see sellers coming in. Now this might be a temporary move to the downside, and then eventually we see buyers stepping in again before sellers coming in. So it's going to be a complex move, but the most important thing is you understanding where the DXY is as of now, and that is at 106, which is a psychological number I'm paying attention to. And if the buyers find it difficult to go past 106, then it's no rocket science. We should see sellers stepping in to take prices to the downside. Now this might come all the way to 105, and it might end, say, at an area like this. It just depends on what the big players are looking at. So all we can do is anticipate, look at price, and just do this focus, and then we'll wait for prices to unfold and tell us what is most likely going to do. So when we step down, say, to the hourly time frame real quick, so we'll look at this on the hourly time frame, and now the consolidation I was talking about on the 4-hour time frame, this is it. It's much better on the hourly time frame. So looking at this on the hourly time frame, we've had a period of consolidation, we had a move to the upside, period of consolidation, a move to the upside. Now once we step down to the hourly time frame, I'm concentrating here, and I'm looking for this period where we have a consolidation and an inability for price to go to the upside and a move to the downside. So once I see something like this, it means this up move from the 4-hour time frame and the hourly time frame is probably coming to an end, and we should most likely see the seller step in to give us a correction, say on the 4-hour time frame, the hourly time frame, which on the daily time frame, for example, is just a pullback or a correction to give buyers another opportunity to take prices to the upside. So looking at it on the hourly time frame, all we're waiting for is for that inability for buyers to go past this point, and then we look for the sellers to come in, or we look for that correction to come in. Yeah, so pay attention to the DXY next week. Pay attention to these selling opportunities that might arise for the DXY, and if we go off of what we're seeing on the DXY as of now, my first anticipation going into next week is I'm looking for these selling opportunities on the DXY. That is my first buyers going into next week. So going off of these buyers, I can step down to other pairs, like, say, let's look at US30 for example. So if the DXY should eventually drop, or if the sellers come in giving us this pullbacks on the DXY, then I'm looking at, say, US30. Now US30 for example is sitting at this psychological number right here of 38,000 right now. If those sales come in on the DXY, we should expect to see buyers coming in on US30. Now with US30 sitting on this psychological number, we should as well expect to see the difficulty from the sellers to make a move to the downside. And if there's this difficulty for the sellers to make a move to the downside, then we should expect prices to move to the upside as well. And with US30, the S&P 500, so we'll look at the S&P 500 real quick. So the S&P 500 as well, we've had these sellers coming in, so price has been moving to the downside, but right now we're close to this psychological number here of 5100. So if we get sellers attempting a move again to the downside and they find it difficult to go past an area like this, which is very close to this psychological number, like right here, if the sellers attempt and fail, then we could look for buying opportunities on the S&P 500 as well. And this is just going off of the buyers I have on the DXY, knowing that the DXY has a possibility to give us a pullback or a correction. And if that happens, then I'm looking for buying opportunities on the S&P 500. So going into next week, I have these buyers already, I have this focus, and let's look at, say, US 2000. US 2000 as well, we had, say, sellers coming in. So we've had prices moving to the downside. And when you compare US 2000, the S&P 500 and US 30, US 2000 seems to be the best pair I might take buying opportunities on. And the reason is simple. We had sellers coming in, so we've had this downward move on US 2000. Now there's something that's very interesting here. So when you look at this psychological number right here of 2000, we had prices, or we had sellers taking prices to the downside, and this was an initial reaction from the buyers, so they took prices again to the upside. Now sellers are reattempting the sells on US 2000, and right now we're sitting on this psychological number again. So right here we're sitting on 2000. Now if the sellers find it difficult to go past this point right here, then we should expect buyers to step in. So coming into next week, I think we might get buyers coming in on say US 2000, the S&P 500, US 30, and those other pairs. You should at least get buys to an area like this, and if the buys come in impulsively, we should even see an area like 2100 being tested. And that is all, say, simply going off of what might happen on the DXY. So that's my buyers on the DXY. I'm expecting sales to come in on the DXY, going off of those psychological numbers, going off of the trend line, and going off of price delivering to, say, the trend line on the daily time frame. So I'm expecting buys on US 2000. And when you compare US 2000, the S&P 500, in US 30, the most favorable one for me will be US 2000, simply because of the way prices delivered to this psychological number right here. So we've had these sellers coming in, we had this initial attempt. I'll make this clean a little bit. So we had sellers coming in, we had an initial attempt right here, and we've had prices testing this area again. So if it fails to go below this point, again, it's not rocket science, you should see prices moving to the upside. And it's telling you already. So coming in, say, from last week, we had sellers attempting the first time, the second time, and all I have to do coming into next week is look for my entry, like my entry trigger. So once I have my setup complete and I have this entry trigger, and then I'm going to go in for those buys. So I'll give it, say, a couple of hours into next week just to see what's happening, and if I get an entry signal, then I'm going in with the buys on US 2000. I'll pay attention to the S&P 500 as well. I'll pay attention to US 30. Now let's look at NAS100. So comparing NAS100 to, say, the S&P 500, US 30, and US 2000, this might be a difficult one for me to trade, but going off of what I'm expecting on the DXY, which is, say, the pullback on the DXY, or that correction on the DXY, I'm expecting buys to come in on NAS100 as well. Now if you trade, say, ranges, this could be a very good opportunity for you, because price on NAS100 right now, it seems to be ranging. So this right here, you can look at this as a range on NAS100. That is the first one you can look at. You can look at this area as well as a range. So each time price gets here, there is a move to the upside. Price gets here, there's a move to the upside. And right now we have prices here, so we should expect prices moving again to the upside. Now I don't trade ranges, so I'm not going to look at this as an opportunity for me to take, but you can see each time price gets to an area like this, you most likely see buyers coming in. Area like this, you see buyers coming in. Areas like this, you see buyers coming in. So right now we still have prices here, which is, say, around 18,000, and we should see buyers coming in. So the difficulty trading NAS100 for me is simply because price is ranging, and once price is ranging, it's difficult for me to see, and I'm already on the hourly time frame, which is the lowest time frame I look at. I need to see, say, a structural move, or say a downtrend or an uptrend for me to take a trade. So once price is ranging on my lowest time frame, which is the hourly time frame, it's difficult for me to trade, say, a pair like this. And if you look at it, say, from an area like this, NAS100 has been ranging for a very long time. So if you really want to get involved on this, you probably want to see prices go above this point, telling you we've cleared this range, or say trade below this point, moving to the downside for you to get good selling opportunities. So right now NAS100 is ranging, and for me, I'll probably just stand aside and just let NAS100 do its thing, and I'll come back, say, when we have a good opportunity, so, or say a clear trend to the upside or to the downside, for me to take opportunities on this pair. So we'll look at gold real quick. So we had these selling opportunities on gold. As I did a trade recap, we had these sales that came in. It was a temporary sell or just a correction, and we didn't capitalize on this because we had a break even on this pair. So right now prices tested this psychological number of 2400, and again, just going off of this psych numbers and the trend that is building up, we should see a pullback on gold to an area like this, say 2300, for us to see buyers stepping in again. Now, going off of what is happening on the DXY, so let's say, looking at the DXY, I'll do this real quick, step back to the hourly time frame. So let's say on the hourly time frame for the DXY, if prices decide to move to the upside, so let's say around this point right here, I'd say 106, if prices breach this area and we see a pullback for buyers to continue to move to the upside, one pair I'm looking at for selling opportunities will be gold. So because looking at gold from the daily time frame and this trend that is building up, so we're still moving to the upside on gold. We have prices reacting from this area, we have an impulsive buy. Prices reacting here, we have an impulsive buy as well. So we should expect a correction to come in on gold to test an area like 2300 and to test this trend line. So this could be a possible move if you look at, say, the DXY and you have this buying opportunity that comes in on the DXY, and that is going, say, with the second bias for me, provided the DXY fails to give me this correction to fulfill what I'm looking at on the daily time frame. So if the DXY fails to sell to give me this correction, looking at it from the hourly time frame, I'll do this real quick and I'll clean this. So looking at it from the hourly time frame, if those sales fail to occur on the DXY, we should see prices moving to the upside. And if it moves to the upside, one pair which is lining up perfectly for me will be gold. So I'll look for selling opportunities on gold to fulfill, say, this correction on gold to test, say, 2300, and to test this trend line for us to see another attempt from the buyers to take prices to the upside. So let's move, say, to lower time frames and see. Yeah, so from the 8-hour time frame, it's difficult for me to see any structure that is tradable as of now, and on the 4-hour time frame as well. Let's see. So all I see here is just a rejection at this point, and we see prices coming down. So I'll step down to the hourly time frame real quick to see. So we had a consolidation, we had a move to the upside, and we had an impulsive move to the downside. So with gold right now, it's kind of difficult for me to see any setup that is building up. But coming into next week, I'll wait and see what's happening on the DXY. I'll be a little bit patient on gold. Just give gold, say, a couple of hours into next week, or maybe, say, give it, say, Monday for prices to unfold and give you, say, a tradable opportunity on gold. And I'm not going to rush anything on gold because I have setups lining up already on US 2000, S&P 500, and US30. So I have 3 pairs I'm looking at, and this already should give me something for next week. And for gold, I'll be patient and allow prices to give me more price action, and then I'm going to act on these pairs. So that is it for the analysis or the forecast for next week. If you found this interesting, if this is helping you as well, don't forget to hit the like and subscribe button, and see you during the next one. Bye for now.